Welcome to the France 24 interview. I'm Kate Moody. Today, we're looking at the Brexit fallout. The UK's decision to cut ties with the EU sent shockwaves across the world, reflected in both political and financial circles. So what are the consequences and challenges ahead for the United Kingdom and for the European Union? To help answer those questions, I'm joined by Jean-Claude Trichet, former president of the European Central Bank from 2003 to 2011. Thank you so much for speaking to us.
It's a pleasure.
Now, in the run-up to the referendum, you said that a vote to leave would be catastrophic for the United Kingdom. Do you still think that? And is the situation as bad as you expected?
Well, first of all, I still think that, and it seems to me that all what we see is clearly confirming that there had been an underassessment of the fallout by the Leave campaign. That's it seems to me very clear. Now we will see exactly where we go. We don't know yet. The UK doesn't know yet exactly which kind of option to follow, and there are many. So we will see. But of course, the shock is there, and the UK decided to shoot in its own feet, unfortunately, and we all are very sad with that.
Now, it's clear that there are going to be a lot of challenges ahead, both for the UK and EU. What are the biggest hurdles, do you think, on both sides?
But first of all, the UK took a decision and has to, live with the consequences of this decision. There was no such decision in the other country in the European Union, and there was no such decision, of course, in the euro area. I think that taking into account the size of the UK in comparison with the euro area, the trade relationship between the UK and the euro area, you can expect some impact, but much less, of course, for the euro area than it is for the UK, and also much less for the global economy itself. The most important thing to me, as regards the European Union as a whole, is certainly the political channel, because we see very clearly with this decision in the UK and with what is happening in the US, that in advanced economies there is a level of frustration of our fellow citizens, of the people in our democracies, which is very high. And this is a phenomenon that we observe in all countries. So we have to reflect very, very seriously on that. It is a major problem for all our democracies.
And something we might be seeing more of then, in your opinion?
I don't know whether we will see more of that, but I think it's a structural problem, which is linked to the emergence of the emerging world, China, India, you name it, which is due to science and technology and their incredible progress, including IT, but not only IT. And all this creates an anguish in our fellow citizens, an anguish in the workers, employees, engineers, and so forth, because everything is changing very rapidly. And I would say in the eyes of our own people, too rapidly. That's absolutely clear.
If we look at the currency markets, we've seen a great deal of volatility since this decision was made about a week ago. Do you think we might be entering a new dynamic for the euro versus the sterling? And could that help or perhaps hurt the eurozone?
No, I think, again, it was absolutely normal, the decision of the UK being what it is, that you had an immediate impact on the sterling. The euro vis-à-vis the dollar moved a little bit, but it was not a big move, and I don't see why it should be a big move personally. So, and the same with the global, I would say, international monetary system. So what I expect is that the dust will settle down progressively. The shock that we had to cope with is much more modest, of course, than, say, Lehman Brothers, to oversimplify, much more modest. And those who said it is equivalent to Lehman Brothers were obviously, of course, wrong. But that being said, the market will, again, find out the new equilibrium not far from now, in my opinion.
So you expect a period of volatility for how long in the foreseeable future, if you had a crystal ball?
I don't want to read in the crystal ball. I think that we had immediate volatility, which is absolutely understandable. Of course, we will have a new set of decisions when the UK will decide to trigger the Article 50, when the UK will decide to opt for Norway option or for the Switzerland option or for any other option, Canadian option. So we don't know yet, and we don't know yet what will be and who would be exactly at the helm of the United Kingdom. We know that the 27 have their own view, and we will negotiate with the UK when the UK knows what to negotiate. So we might have a new, I would say, set of events that could move markets. But all what counts, is in the medium run, and I expect that in the medium run there will be a shock for the UK, certainly a new equilibrium for the UK. I don't think that the rest of the world will move a lot.
Now, what do you believe that the central bank's role should be? We've seen a fairly muted reaction so far from the European Central Bank, saying it's ready to provide liquidity. We haven't really heard very much concrete. Do you think it should be doing more, perhaps considering taking interest rates into negative territory? Or do you think it's had the right response?
I think that it had, of course, the right response. Central bank is there to be an anchor of stability. If the central bank itself is febrile or feverish, it's not good at all. I mean, and I think they were very, very right in saying we will see, we will observe, and we'll take the decisions that are needed when needed, and to the extent that they are needed. And I think it was the right decision to take.
Do you think the European Central Bank has enough tools at its disposal to counterbalance some kind of shock like we've seen?
I think that all central banks in the world, including the ECB, proved that they were not hesitating to take decisions when and where needed. And these decisions were, as you know, very, very impressive in many cases. Not only in Europe, everywhere. So we know that. But on the other hand, we also know that the shock is a political shock, and that it is up to the governments and parliaments, whenever they are involved, to take the appropriate decisions. So I count very much on the wisdom of governments in the UK as well as in Europe as a whole to do anything to calm the situation and I would say run their own country as regards national governments and Europe as a whole as regards the European institutions, including the Council, of course, in the best fashion possible. The central banks are not the only game in town. And there is an optical illusion which very often put the central bank as if they were the only player. No, they are not the only player. You have governments, and particularly in this situation, governments and European institutions have an enormous role to play.
Now, we know that smaller Eurozone countries, Ireland, for example, are going to be more exposed to the shocks of the Brexit than perhaps bigger economies like France and Germany. Now, you don't seem to be implying that you think the ECB should be doing anything to shield them. Can anyone and should they be playing a role in trying to help these smaller economies?
Well, the smaller economies should be helped by their own government because the Central Bank of Europe, as you know, is devising and deciding policies for the euro area as a whole. And it is doing that, I have to say, it seems to me very well, with unlimited supply of liquidity to all commercial banks everywhere in Europe, and with all the weaponry that has been activated, including, of course, what the market calls QE. So I think that at the present moment, the central bank is there, and as certainly not necessarily, again, that depends on what we will see, and that depends on the national governments and the European institutions. Central banks are not the only game in town.
US President Barack Obama has said that Brexit raises long-term concerns about global growth. Do you disagree? Do you think we should be very worried about global contagion?
I think, again, what is worrying is the frustration of our people, our fellow citizens in the US, in Europe, in the UK, as well as in Europe, also in Japan. And that is a real issue, which is due to fundamentals, features of the present economy. And we will see exactly what happens. But in that sense, yes, we have to be very vigilant. But I don't expect that the single fact that the UK is leaving the European Union will per se, impose on the entire world a dramatic new move. I don't think it is commensurate. I mean, the UK is a relatively small economy, and it represents a small portion of the European Union as a whole, even without the UK. The 27 are the most important commercial power of the world, even without the UK, more than the US.
Mr. Trichet, we don't have a lot of time left. I want to finish by asking you, you were president of the European Central Bank during the global financial crisis. You oversaw the bailouts of 3 Eurozone countries. The EU is now facing arguably the biggest threat to its existence since it was founded. Are you glad you're not in Mario Draghi's shoes?
First of all, constantly during the crisis, since the financial crisis and Lehman Brothers, and then with the sovereign risk crisis, I was told European Union and the euro area are seeing their existence put into question. It came and came and came again. I was saying no. The existence of the historical endeavor of the European and the very, very existence of the euro area and of the euro itself is not into question. And we proved that it was not the case. So beware of those permanent bias against our own European endeavor. We were 15 at the time of Lehman Brothers. We are 19 today in the euro area. That is a clear illustration of this resilience.
Mr. Trichet, thank you so much for joining us here on France 24, and thank you for watching. Stay tuned for more news and headlines coming up.
Thank you.